All right, a fantastic day for the Bulls. They managed to rebound finally after selling off, like, what was it, 5 straight days on the S&P 500. You had 9 out of 10 days on the NASDAQ. So this was a big day for the Bulls to be able to finally string together a good rally. And good rally it was. I mean, you had the S&P 500 up about 0.9%. You had the Russell 2000 was up almost 1.1%. And then you had the NASDAQ, it was up about 1.5%. So all around, pretty good days. It wasn't one of those like euphoric 100-point rallies that just ripped the faces off of the shorts. Instead, it was just a consistent, steady growth throughout the day. You saw a lot of strength in your energy sector. Once again, that seems to be the sector that just won't die. I mean, it's continuing to push this market higher. And in fact, if you're wondering, like, if it wasn't for the energy sector, where would this market be at right now? Because so much of this, the strength of the market, even on the down days, there's been a lot of strength in your energy stocks and in your financials. And both of those have really have a lot of influence on the market as a whole, not as an individual stock, but as a whole, like the entire sector itself. So those two sectors playing into the market's hand of basically keeping the market from just completely falling apart over the last, couple of weeks or so. So big day for the market, rallying. Like I said, energy stocks, financials, they were around, but you also had a lot of strength in the technology stocks. That's something that we haven't seen much of late. You also had a lot in materials and discretionary. To the downside, what you saw the weakness in was in the staple stocks, your utilities, your staples, like your safety plays. All of those were really seeing a lot of, not so much selling except for the utilities, but they were not keeping up with the market as a whole. They were barely moving. I think it was only one sector that finished lower today, and that was utilities. You also had real estate that struggled a bit as well. We talked about on the last live stream, and I did it on the video as well this week, and there are some major support levels that were coming up, and we tested all of those support levels. And you saw as well today, the market actually tried to sell off early on, went red, couldn't establish new lows, and then it made just a V-shaped bounce and went straight back up and continued the rally from yesterday. So it was a sharp rally off the lows once again today, just like what we saw yesterday. So let's go ahead and get right into the charts. I want to talk about the support levels first, go over some charts with you as a whole, start talking about a little bit more about the sectors and what the industries are that are rallying the sectors, and then get to your stocks as well. So make sure to post in the comments sections, whether you're watching on Facebook or YouTube or on Twitter. Let me know what stocks you want me to go over. I'm more than happy to cover every one of your stocks today, and we'll knock them all out one by one. And make sure to like and subscribe to the YouTube channel that you are watching it on right now. It helps me continue to grow this channel. So let's get to this chart, sir. SPY. Here's the big support level, and I've been talking about this one for a while now. This support level going all the way back to September of 2020. It has held very strong. I mean, there's been a little bit of moments here in the early going, like late October of 2020, where it dipped below that trend line. But nonetheless, it has managed to hold it very, very well. Well, we tested it on Monday, yesterday. We tested it. We also tested this support level going back. They almost converged together, very close to one another at around 456. At the price level of 456, held support, and we've shot higher. I mean, at this point, we're almost like 140 points off of the lows on S&P 500. So incredible rally, incredible rally. Where does it have us though? We're only 1.7% away from actually having new all-time closing highs. Now that's different from all-time highs. It's actually the highest closing price for the S&P 500, and that's really the most important one, because you can make all-time highs, but if you can't hold those highs intraday, it really doesn't matter too much. All-time closing highs means a lot. We're only 1.7% away from that. So if you have a day like tomorrow, a day like today, where we rally another 0.9% and we rally again like in a similar fashion on Thursday, we'll be at new all-time closing highs. It's crazy how quickly the bulls continue to V-shaped bounce price right off of these support levels, and that's really been like the hallmark of this market for quite some time. Also, I talked about the 50-day moving average, and while we closed below it yesterday, like what we've seen many times before, we'll close below it one day, but we won't close it below it the next day. It's like the very next day we rally right back above the 50-day moving average. We saw it here back on December 20th when we closed below it. The following day, rallied right back above it on Tuesday. Again, it's funny too, is it always happens on Mondays. It seems like Monday here, Monday here. I think we had another Monday rally as well back in early December too. So nonetheless, we're rallying back. We're back above the 5-day moving average, above the 20-day moving average. The only one that we're not trading above right now is the 10-day moving average. And notice too how far away this 200-day moving average is from being tested. I mean, it has been what seems like centuries since we've tested it. In fact, we haven't tested it since June of 2020. That's how long it's been since we last tested the 200-day moving average. That's crazy. Now, not the same. That's not the same case and with the Russell 2000. We'll get to that in just a second. But we do have a little bit of resistance here. If you remember back in December, this 4,700 level, or 470 on SPY, 4,700 on the S&P 500 is a very, very stubborn resistance level. Where do you think we closed at today? 469.75, just below it. So are we going to gap above it tomorrow like what we've seen many times in the past, like what we saw back on December 27th, where when we can't break above it, we just gap above it? Or are we going to see where the many times before that date where we got above it intraday, but we closed below it by the end of the day? So we want to watch to see tomorrow, Wednesday, even if we start to trade above it, are we going to be able to hold those gains above it, or are we just going to sell right back off and resume this trend lower? Because SPY doesn't really look all that bad. I mean, technically, we're still putting in higher highs and higher lows. I mean, this is your previous higher high. Monday was a higher low. We didn't break any major support levels. We held this rising channel. When you look at the weekly chart, it's still in pretty good shape. And we've talked about why that is, about the influence of the FANG stocks like Apple, where like on a day today, it's up 1.7%. That's going to weigh heavily on the market as a whole. I mean, Facebook, another $1 trillion company. Apple's a $3 trillion company, or pretty close to it. It was up 1 or almost 2%. So that's going to weigh heavily on the market. And then you had Amazon, not Lamar, Amazon. And that's a $2 trillion company, up 2.4. So between those three companies, that's $6 trillion of market cap rallying significantly, and that's going to pull the S&P 500 up. It's also going to pull up the NASDAQ 100 even more so, because it's more concentrated in the NASDAQ 100 than even the S&P 500. So all of those rallied. There was actually four major tech plays that did not rally or didn't rally very much. One of them was Microsoft, only up 0.2%. Google, it was only up 0.7. Okay, you could say that rallied some. So that's like a $2 trillion stock. Still, 0.7% is a lot for a $2 trillion company in terms of its influence on the overall market. But it really didn't keep up, though, with the NASDAQ, which was up 1.5% on a day. So it lagged. Tesla, the same thing. It was up 0.6%, still lagged the overall market price action. And then Netflix actually barely finished higher on the day. So Netflix, you really thought you'd probably see a market bounce here pretty soon. And if you look at the chart here, maybe you got a little bit of support there. I'm not sure, but it's definitely worth watching here in the coming days. And like I said, make sure you guys are posting your comments in there about what stocks you'd like for me to go ahead and look at. I'll look at all of them and go through each of these here in this live stream. I do it on Tuesdays and Thursdays here around somewhere between usually 4:30 and 5. I tried to gun for 4:30, but wasn't able to quite get there today. All right. So Netflix, we've talked about the FANG stocks. We've talked about the different sectors that we're rallying. Let's look at let's see here. May not have it up here. Oh, here we go. Sorry about that. I had to go through a couple of different views there. But let's look at real quick here, Bitcoin. Now, we talked about Bitcoin, this massive head and shoulders pattern. It's been creating all sorts of problems for people who have put, their life savings and their hopes and dreams in Bitcoin becoming, $100,000 coin, or just, going up to $1 million, like some people even believe. I mean, there's some really, really crazy beliefs and hopes out there as it pertains to Bitcoin. So what's significant, though, is when you zoom in on it, though. Look at that. It's holding the support level pretty well. It tried to go back below it yesterday, but it's starting to stabilize. It's starting to show some strength. Now, does that mean that it can't break the support level. No, it definitely can break the support level. But for right now, it is giving you a decent trade opportunity here. And that trade opportunity would essentially be, if it breaks below yesterday's lows, I wouldn't want to be into it. So that's going to probably be around 39.5. If it breaks that, you don't want to be in it anymore. Or at least I wouldn't want to be in it. And then right now, as it's like holding that support level, it's setting up for the opportunity. Okay, maybe it can go back up to 47, 48. That gives you about, okay, let's say it can get up to about 48,000. That gives you about $6,000 of upside with about $3,000 of downside. So it's a pretty nice trade setup of 2-to-1. And that's just at the very least. So you do have a little bit of a downtrend here that it needs to break through. That could cause some problems for the stock. So if it could get up to like this 46,300 range, and if it could bog down right there. So that would be one thing to watch going forward. It's only tested at one time, so we don't know for sure how strong that resistance level is because there hasn't been multiple rejections just yet. All right, going back to stocks now. Industries. We want to look at these industries here. So on the right side of the screen, this is the list of industries that have been trading higher today. What do you see at the top? You see department stores, which is kind of a strange one. I don't really have much desire to play the department stores. A lot of them are in sideways trading ranges, like similar to what Amazon's been stuck in for like, what, a year and a half now, just trading sideways, doing nothing. You're seeing a lot of that, like with Kohl's, for instance. It's been trading sideways, not for as long, but for most of 2021, it traded sideways, slightly lower. So I'm not really interested so much in the department stores, but what you want to kind of get is a feel for the theme here. What are you seeing a lot of? Okay, you see electronic gaming. They were up today. So was tech. But then right below, you got oil, coal, silver, oil, real estate, aluminum, copper, oil, materials, and energy. Those are your industries that are really rallying right now, or the strongest industries out there. The problem with energy, though, is going to be that it's so overbought right now. I mean, you start chasing up here, and I even mentioned this in a previous live stream that I did. It's very difficult to start chasing right here. I don't have any energy exposure at this point. I got stopped out of my last third of Hess yesterday. I made about 9% off of it. Really good trade. I was thrilled about it. Still wish I was still in it because I got stopped out and it went back up to its highs again, and it went even higher than that. That stinks, okay? But that's part of trading too. You're going to have stops that get hit, and then you're going to watch it reverse. I mean, that was very real possibility yesterday when I got stopped out of it. I even knew going into it that was a strong possibility. Nonetheless, I'm very cautious about not letting strong winners ultimately turn into losers. You don't want that from a psychological standpoint. It's very damaging. Nonetheless, energy continues to rise. So you're getting a lot of people right now. They're getting sucked into the energy trades. That's what I'm getting asked a lot of right now. That's probably when you want to be the most careful, because where do you get long on energy? You get long on its initial breakout right here when it's just starting to break out. You don't get in beforehand, because then you're front running a breakout that hasn't even happened yet. And for all we know, it could just go straight down. When you get in, you want to get in when it's just starting to break out, like it's doing right here. So it's breaking out, and it's been doing so. You're not chasing it up here, because just like you want to be getting in right here, these are the times where you want to start, booking profits, or at least taking something off the table. So, all right, let's go ahead and we talked about pretty much everything I wanted to go over. Remember, you got bank earnings that are going to be cranking up here. We got one question here already about JPM, and I'll go ahead and hit that one while we are on that discussion. Bank stocks have done really good, and maybe they'll have a pretty good earnings season as well. The financial sector is testing some significant highs here. Okay, you got it right there. It's closed right on it. You got one bank stock that I think is pretty cool. You got Morgan Stanley. It is breaking out today. Really nice looking chart right there. But again, you start to look at these bank stocks. When are they all reporting here? Well, pulling up JPM, you've got earnings coming up on January 14th. I kept looking all the way to the right. I was like, where is this thing? I know it's on here somewhere, but it was actually just right to the symbol. January 14th. Today's the 11th. So that's, the end of this week here. You also have Bank of America on the 19th. You guys Wells Fargo on the 14th. So even if they're not reporting just yet, like MS, for instance, it's reporting on the 19th. We said JPM is reporting on the 14th. Even if your stock isn't reporting on the 14th, it's still going to be affected by what JPM does, what Wells Fargo does. You got Goldman Sachs that reports on the 18th. So be very careful. We also have a 3-day weekend this weekend, too. For the United States, we're shut down for Martin Luther King holiday. So the markets will be closed on Monday. So that's why you have such a gap between JPM and Goldman Sachs reporting. But not to lose track of JP Morgan. What are we looking at here? Well, we have a pretty good support level here that we've outlined in the past, but it managed to hold that support level. When it tried to actually form a top on the trade, it used it as support and it's bounced higher. So you got a little bit of resistance here at 174.75. Right here, you got a little bit of consolidation. All of it looks pretty good. You could even say this is like an ascending triangle pattern. I like it all. I don't want to buy it ahead of earnings. Usually my rule is I won't buy a stock that has earnings reporting within the week. Okay, so if it's Monday and it's reporting, next Monday, I won't trade it. Okay, very rare times do I make exceptions, but I definitely won't hold it through in earnings. I always sell my stocks, my trades before earnings come out. So nice ascending triangle pattern there. Could be breaking out, but you have a limited time frame to really benefit from it before the earnings reports, and then you start getting into the higher risk time periods where if the earnings don't come out the way that the market wants, there's a good chance you're going to see a steep sell-off. If they exceed expectations, you'll be holding on to gains. The problem herein lies is that we don't know exactly what it's going to do. How is the stock going to respond to earnings? Because it's one thing to guess how the earnings are going to be, but then you've got to also guess how is the response to the earnings going to be? Because even if it has a really good number, are they guiding higher still and so forth? And that can be a real problem for traders. All right, let's see here. We got a request for DOCN. DOCN is becoming a regular on this one here. We get asked about it a lot, or when I say we, I only mean me because I'm a one-man show. But I consider all you guys listening part of the we. Declining resistance right there. That could give a little bit of problem for the stock to try and break through. I like how it's not necessarily breaking down here. You got the start because it hasn't been trading that long. It's only been trading since last March. Just now starting to have a 200-day moving average, and already it's trying to hold that 200-day moving average. I think it's got a history of about 5 trading sessions where it's actually had a 200-day moving average. Nonetheless, it actually has been providing some support. That might be one of the few times I've ever seen that actually happen before, if ever. Declining resistance needs to break above that, continue to hold the support area there. And if it can break above this resistance level, I would become more bullish on it. But until that happens, I'm a little bit indifferent towards it just because there's been multiple occasions where this declining resistance has been tested and it's rejected price. So keep that in mind. Thoughts on Merck? Well, first I got to type it in correctly, but if you go back here, and I did a chart on this one not too long ago where there's this huge box basically where it's been trading in going back to 2019, beginning of 2019. It's had 3 instances where it's broken above this box, and each time it's been worth fading. So back here in early 2020, when it broke out of the box, it was worth fading. Again, here in March of 2020, when the market had a huge sell-off, that was a big catalyst. That's why you got the big sell-off right there. It was also worth fading, right? Buying the dip on that one. Then for the better part of almost 20 months here now, it's been just staying in here, minus this episode here where it just went parabolic, goes outside of it, and then again, it was worth fading. It goes back down into the box, and now we're just stuck inside the box. So even if it breaks out of the box at this point, I'm a little bit hesitant to want to get in on Merck just because is it just going to be another fade opportunity like what we've seen the last 3 times going back to 2019? So within the box, I don't think it's a trade either. I think if anything, maybe you buy the dip on a push below and out of the box. That might be the only way I see to trade it right now. Otherwise, it's just trading sideways in a Very, very time-consuming manner of tying up your capital. All right, so we had a question about some of the FANG stocks here. Pull that one up. Abdul writes, Microsoft hit 305. Nice analysis. Do you think Apple will hit 165 and Meta 300, or is the analysis over? Or meaning, like, basically, is it not applicable at this point? Let's look at all three of them here. Microsoft, we talked about there being a triple top pattern here in place, and it broke through that triple top pattern. But I also said too, it's like, guys, watch this rising trend line, because man, it consistently bounces off of this thing, and it did it again here. So now the big question for Microsoft is yes, it held this 305 level like pretty much to a T. Now it's back above the 5-day moving average, just barely. Is it going to touch this resistance at 318 and then come back down? So a lot of times what you will see on charts, and we'll simplify it a little bit here, you'll see the triple top breakdown, and then you'll get this dead cat bounce effect where it goes back up to the previous support that it broke to confirm the pattern. It'll test it, and then it'll come right back down. So like today's highs were about almost 317, 316.61. So in the grand scheme of things, yes, it did hold this rising trend line, but I'm a little bit worried that it may be just dead cat bouncing into this resistance level here, and ultimately it's going to just go down even further. That doesn't mean that you can't play it, but I think if you didn't get in at like the 305 area, 306, you don't want to be getting in right below resistance either. You want to really be waiting for it to break back above resistance, and then you can play, you know, like 318 up to 342, which is still a pretty good return if you can ride that train. Okay, so Apple. Do I think Apple will hit 165? What did we get down to yesterday? About 168. I think really where I would like to see Apple pull back to, if you're going to play the bounce, is this like maybe 163, 164 area. This would be this massive support level that goes all the way back to September of 2020. So if this support level, it can come back down to it, that would be a good opportunity to play the bounce, because you can play right off of this bounce here, assuming that the market's holding up or trying to bounce itself, and then put your stop loss just below the support level. If it goes back down below the support level, you're like, okay, I'm peace out. I don't want to be in it anymore. So that's how I would do the Apple. Now with Facebook, I keep calling it Facebook. I know it's called Meta Platforms. I don't know if I'll ever get around to calling it, just same way I don't call Google Alphabet. So you have I've been watching this one here with Facebook where it's almost like an inverse head and shoulders pattern that's forming, that maybe this is the right shoulder. That's really what I'm kind of interested in at this point. Are we forming a right shoulder? If so, then I want to try to get in at maybe 354 on that break, try to ride it up to maybe 383, get, you know, close to a 10% return on that trade. Abdul was asking, will it see 300? For 300, yeah, I mean, that would, it's not the crazy, I mean, it definitely wouldn't be a head and shoulders pattern anymore. It'd almost be maybe a possible double bottom pattern at that point, because that would be matching the lows from December. That's, I think, I mean, it wouldn't be a bad, I mean, it would actually be really nice from a charting standpoint if it would get down to that level, because you have a lot of key support there. I think it's always possible. It's really just going to depend on the whole market. If the NASDAQ continues to selling, if it continues to pick up where it left off back on Friday afternoon of last week, then yeah, you have the potential for a retest of 300. But I think a lot of it's going to have to do with how does the NASDAQ as a whole perform. All right, we got some beatdown stocks here from Dad Austin here. PBW are all beat down. What is their line where I start seeing recovery to buy down my share price? Well, one of the big things, and this is more from a personal trading standpoint, I don't like to buy down my share prices. I'm all in, not all in from like 100% capital standpoint, but I put my whole position size at work. When I start losing on a trade, the last thing I want to do is start adding money to a losing trade, because it increases the emotions in that trade, because I got more capital tied to that trade, and it's just really a bad practice, because ultimately you're going to have some stocks along the way that if you don't use stop losses, they're never going to come back. And if you've been dumping capital in them all the way down and they don't come back, then there's a good chance you're going to be losing a lot of your capital in the process. So not a fan of adding more capital to losing trades. But PBW, this is your I can do the analysis on it for sure. Looks like, geez, I don't even know about this one. I'm just trying to find maybe something that, I mean, it looks like it's just in full-fledged breakdown mode here. I mean, it had this rising trend line off the March lows. Definitely didn't hold that for very long. Tried to recover it. It couldn't. Tried to redo it again. Couldn't do it there. And now it's just been in a free fall ever since. It's really like a falling knife pattern here where it's just yet to find its bottom. This was probably your key support, and that broke. So now, this thing's just trying to find some kind of bottom here. So maybe the next support level to watch is maybe this one here. I don't know how strong it is, but it goes back to the October of 2020 lows. Those are maybe some of your areas to watch there. If that one breaks, man, I don't know, guys. It's a tough one. That's about all I can tell you on that one, just looking at it from a technical standpoint. UPST. Upstart, man, a lot of people got burned on this one too. Let's see here. Maybe the trend line from the very first day of its own trading, right? Definitely doesn't like this support level right here. So let's go ahead and delete that one. Bear flagged here, continued lower. Now it's testing support. So maybe it finds some support here, and it can rally off of it. I mean, definitely it's oversold. I mean, it's been selling off for a better part of 3 months now. And yeah, I mean, this declining trend line hasn't broken at all. I mean, still very ugly, needs to get it back above that. So that's what I'm looking at on UPST. One, does it hold this trend line? And two, can it break this declining resistance here that's super steep? Then PLTR. This one lost a major support level as well. It needs to get back above support at around 1805. Outside of that, there's really no support until where it first began. That's around $10. So until it can get back above 18, this stock is treading in dangerous waters here. GPS double bottom. This was one of the retail stocks I was telling you about earlier. I wasn't focused on this one specifically, but I was focusing on discretionary and specialty retail and apparel stores. Nice little trend line here that broke this past week. You do have a double bottom right here. Looks like it wasn't able to hold it. The breakout level goes right back below it yesterday with that sell-off. And then when you zoom in on it here, what it really needs to do is it needs to capture that 1811 level once again. Until it can do that, be very careful about this one. Maybe, push above 1802. No, I would say about 1811. It needs to get back above. It's a wide stop loss, but the nearest place to put a stop loss is probably either right below the candle bodies, like around 1734-ish, or below the lows from yesterday, which would be 1667. You could put a stop loss at. But yeah, definitely a double bottom. I just don't like how it's been acting the last couple of days. I like to target on markets that are weak, like what we've seen over the last couple of weeks, pullbacks to major support levels that held, consolidated, and then started to bounce again. And so GPS, it pulled back to the support level, but it didn't hold that support level. All right. What am I going to be sipping on? I might have some WhistlePig 12-year because I'm going to be recording a podcast later today. So that might be the choice that I am making today is WhistlePig 12-year. What are your thoughts on AMC, squeeze or bust? The wind has gone out of the sails on a lot of these meme stocks, man. I wish I could give somebody better hope on these things, but I'm not seeing it on the charts right now. Doesn't mean that it can't, because we've seen some really nutty things over the past year in these meme stocks. You can maybe say there's like a little bit of a rising trend line there going back to February of last year that it's trying to dearly hold on to. But yeah, this support level here, this breaking that 30 level, that was huge. It tried to recapture it, couldn't. Now it's back down to basically a rising trend line. Let's pull it up on the weekly so you can better see it. This rising trend line going back to February of 2021. So far, it's holding it, guys, but there may be some support here in this area too at 15. That's still another $7 down, but definitely something you want to watch for as well. So I don't like it, guys. I think there's a lot of resistance here above, even if, you know, maybe it gets up to 30. But I wouldn't be putting in these high hopes. I mean, I feel like in a lot of ways, you know, the whole Wall Street bets movement, I think it's been selling a lot of people a false bag of goods. I mean, now they're out there, you know, promoting NFTs and just, you know, I mean, it's a money grab movement. So, you know, and a lot of the retail traders, they got sucked into it and they're just getting hammered on these memes. As for the IWM analysis, yes, you're late, but don't worry because you can always rewatch it. But I did go through it pretty good. Actually, did I? I don't know if I did. Man, gosh. I know I've looked at it a number of times today. I didn't go through it, man. My bad. Sorry about that. I can't even blame it on being a Monday either. That was a brain fart. All right, so major support here on IWM. It held today, and I don't even think I did the Qs either. I think I just focused on SPYs. But yeah, major support level here. It's tested again. 6 times it tested and held. Looking like we're trying to make it a 7th here. Tested, held, you know, into the close yesterday, and now it's rallying. Look for maybe a move up to 230 or so. I wouldn't try to push it too much further than that. Maybe even get a little bit nervous at this price level here at 226, because that's going to also weigh on the index as well, because we've seen a couple of sharp price rejections right there. If it can actually break through this, you technically have a inverse head and shoulders pattern here going on. That's your left shoulder, your right shoulder, and then you got your head, or I'm sorry, left shoulder, head, and then you got your right shoulder. All right, so it needs to get back above that. So there's a couple of layers of resistance there, but the good news for the bulls is that you did manage to hold this massive support level for a 7th time, at least for today and yesterday. On the Qs, gosh, I can't believe I forgot to go over these guys. You guys shouldn't let me do that. Strong support level again, like SPY. This support level did hold, and it's rallying like crazy. So, unlike Microsoft and Google, though, this resistance level did get broken today. So maybe that gives hope for Microsoft and Google as well, because you can see like Microsoft, it's just trading just below it right there. So Qs are back above it. They're not that far from all-time highs either. I mean, it's a little bit further out. It's like 5% from all-time highs, whereas the S&P 500 is about 1.7% from all-time closing highs. But definitely keep an eye on that. Next question. So thank you, Swipe, for reminding me to do IWM. My question regarding golf, can you take a look at that? I don't know anything about this. ACUSH. Okay, okay. Golf is the symbol. Okay. I've never traded this one before, so never even done analysis. It's a clean sheet. Sometimes you guys bring some new stuff to my attention that I've just not been familiar with. So right off the bat, I see a nice, and thank you for watching me from Sweden too. September 2020, this trend line here, very strong, very impressive. I think it's definitely worth adding to my watch list here. I'm going to go ahead and do that. Really cool chart there. I like this one. Reason why, you can put a stop loss below the lows from yesterday. So that's going to be around 48.62. You got it, you know, entry anywhere above 49.81. Maybe there's some resistance here around 53. Could also have some maybe at 52, but it's only been tested twice. So we, you know, when you see like only an initial price point and then it's been tested and rejected just once, doesn't give you like a huge sense of, okay, this is going to be strong resistance or not. So it's sometimes worth playing. But I do like this rise off of the trend line, especially considering that it's higher highs and higher lows, higher highs, higher lows, higher lows, higher highs, higher highs, higher lows. So it's a good, healthy trend line. So thank you, Dottie P. So yes, hit that like button for free. Let's see. Don't want to overstay my welcome, but have you ever looked at SEMR? Yes, let's look at SEMR. Doesn't look like I have any analysis on it though, but more than happy to mark this sucker up. Inverse head and shoulders pattern right here, left shoulder, head, right shoulder, back above it. So we see this a lot with the inverse head and shoulders pattern. I always warn about it too. I was like, guys, inverse head and shoulders patterns, they can form some of the nicest topping patterns you've ever seen. But over the last 10 years, man, I'm telling you, these things have created a lot of bounce levels. And a lot of times they're very sneaky too. You'll get these like little, barely these lackluster moves below the neckline, just enough to suck in a lot of people who want to short the stock, and then it'll just blow right back up above the neckline. That's the hardest part about trading head and shoulders patterns right now. But yeah, this is a head and shoulders pattern. Got a little bit of resistance maybe at 22. I mean, it's only been tested once. We don't have multiple rejections there, but that could come into play as well. But yeah, I don't think it's a clean bounce play just because it did drop below it. You could maybe even say, well, Ryan, you got some support right there. Isn't that good enough? It might, but I mean, that was like 7-8 months ago, and it hasn't retested it once since then. I think there's probably better places to go if you're looking for a new long position, like what we were just talking about with golf. I mean, that's a pretty nice one there. Added to my watch list myself. But SEMR, if I was in it right now, I would definitely be wanting it to hold Monday's lows at the very least. But I'd also want it to hold this support level here that it recaptured today. I don't want to see it sneak back down below it. I should be getting the Twitter messages. If I'm not, I'll definitely look into that and try to get back to each of those individually. But I haven't seen any Twitter messages pop up here just yet. Let's see. LCID did a very... AAL. Let me get to that one. Chris L was asking about the Twitter messages. I haven't seen any pop up in this particular segment, so maybe I need to make sure I'm not missing out on those. Lucid. Yeah, I mean, real good. Have you seen Neo, though? Bounced today, but man, it's just really, it's trading below some major support there. You have that bear flag, not doing too good. Tesla, really kind of a lackluster move today as well. A great bounce yesterday. So LCID is definitely the leader in terms of momentum right now. It's the one with the most momentum. Got a little bit of a breakout today. Nice little base. Probably for me, I would be putting my stop loss below 40.48 from a support level standpoint, back above all the major MA. So I think this one looks pretty good. It's a wild stock. So, I mean, it can be up 9% today and down 10% tomorrow. So you got to go into it with those expectations that this is wild. This is a wild play. If the market sells off big tomorrow, this one may be getting it even more wild than it was today. So be careful with these trades. It doesn't hurt to take profits along the way. 55 is probably where I would be, targeting for a place to maybe take a good chunk of profits off the table, and definitely some along the way. AAL, though, was getting all backwards here on my questions here, but AAL, Alex Ramirez asking about. This is one I was watching too today. I always like to look at like Jets to see how that one's doing. You have a very similar chart with Jets and AAL. I think I highlighted that one maybe a week ago. But yeah, I mean, this one might even be the better trade setup between the two. I think you also have the airlines reporting here pretty soon. Let's see. Delta is reporting on the 13th. So you got that on Tuesday. LUV, the 27th. What do we got for AAL? We got AAL on the 20th. So because Delta is going on the 13th, it's going to impact AAL because they're going to use the Delta earnings to extrapolate what they think AAL is supposed to be doing. It won't be as crazy of a move usually, but it will be influenced by the price action in Delta. I say typically. There's always something crazy that can happen with earnings, but typically you don't see as big of a move as the company that's actually reporting the earnings, but that doesn't mean that can't change. I like the consolidation. You got the resistance at about 21, just below 21, so needs to get back up to there. Stop loss for me probably. Let's go ahead and just get rid of that line. Stop loss probably needs to be below around 18.38 for me to be in this trade. I think you got that plus pretty good upside there, almost about 10%. So I do like the chart still. This is a good question. I mean, everybody has different preferences. Some people I know that will be shorting, like in a bear market, for instance, they'll short like 200 stocks at once. I don't even want to even know what that's like to try to manage that many stocks. I couldn't. I wouldn't even take the individual trades serious enough. I got to have more capital at risk with each individual trade. So I'm watching it because I'll be watching one stock, and if I have 199 other ones, I don't want those to all go astray on me because I'm just focused in on one particular one. So it's different for everybody. 4 to 6 is, I mean, to me, that doesn't sound bad at all. I usually try to have it run anywhere from 4 to 6, maybe up to like 10 or 11 trades going at a time. In a really good bull market, I'll have, anywhere from 10 to 15 trades working at a time. I don't mind that, but I usually work my way up to that. I've taken some profits and a number of them along the way. But that's going to really come down to what you feel like you're capable of doing, what feels overwhelming, and what feels like something that you can handle. Thank you, Renee, for those kind words. Appreciate that. And thank you for watching from Oregon. NA, let's look at this guy here. Moon of Vega. So one thing here, I mean, this is $3 stocks. I mean, this is a wild child here. Maybe there's some support there. I mean, you could see where it's hit it here, hit it there. I mean, multiple times. And I'm not a fan of like stocks under $5 or even most stocks under $10 for that matter. But there's definitely some support from a historical standpoint there that makes you want to hope that it can hold it. Now, for me, if it breaks back below this thing, maybe around like 265 or so, I'd probably be jumping out of the trade if it were me. You also have some resistance here on the decline, and it's only tested it once, but I definitely could be in play though. Let's see. I mean, you got some resistance there too. I would probably focus on this one because it's more closer to home. So if it gets like to 350, that could be some resistance there. But watch that support though. That's kind of killer though. I like that support. All right, Chris L is interested in OCUP. Let's look at what OCUP has. Let's see, started phase 3 clinical trial in November and should be reporting on January 31st at an R&D conference. Careful with the biotechnology stocks. I mean, the news on those things when they have FDA approved, they can be wow. They can make or break you. I mean, they can, fulfill your wildest dreams on a stock, or they can just really make life miserable for you, especially these ones that are like $3 and stuff. And I've seen a lot too over the years where stocks are supposed to do, or these biotech companies are expected to do that, or there's always this news that's lurking out there. I remember when I used to trade penny stocks, which I'm embarrassed to say, but I mean, over 20 years ago I would, and I get sucked into some penny stocks, and I would be like, man, if we can just get a good FDA release or a press release out there, and it would never happen, And I'm not saying that it's not going to happen for OCUP. I know nothing about this stock, but I hope it works out really well for you. The problem with this was, man, there's not a lot of volume for a $3 stock, only 121,000 shares. I mean, this is a news-driven stock, so it's really hard to do technical analysis on it because it looks like it's just waiting for that next news piece. I mean, I don't know what these spikes are from. If I had to guess anything, it was probably a news piece. So careful with those. Do you only trade or do you have long-term stocks? If so, which is your favorite? No, I have different portfolios. I have a dividend portfolio. I have a long-term portfolio. I think like right now, I don't know if there's really necessarily a favorite that I have. Verizon for one, like from a dividend standpoint. I added some shares to that one the other day in my dividend portfolio, mainly not because I'm looking at like this kind of price action here, more so just because I like that 6% dividend that it has. That's a dividend portfolio that's separate from my trading. Long term, there's not a lot of good long term setups out there right now. I mean, you got stuff like Square, for instance. Let's pull up Square because it's fallen from grace, man. I mean, it's come from 290 down to 148. That's almost a 50% clip, right? Is it worth getting into now? I mean, these are stocks that could go way, way lower. I mean, back in 2019, this thing was trading at 86. You know, at the end of the COVID sell-off, it was down in the 30s. These stocks can drop still a lot further, even if they are 50% off of their highs. So what I'm really looking for is a market correction that kind of gives you a true sense of where a lot of these stocks' real value is at. And right now, the S&P 500 is 1.7% off of all-time highs. If you think that a market correction won't send these things even any lower, just look what it's done, you know, in the later parts of December here, or early parts of January, where SQ still kept selling off. So you got to be careful out there. I really want to see some extremes on like this T2108 here, where it measures the percentage of stocks above their 40-day moving average. When they get down into single digits, this is where, let me see if I can move my face here because it's too big. All right, I'm going to go up to the top of the screen for a second, but you can see here where when it gets down to like this 1.8% of stocks trading above their 40-day moving average, or 2%, or just single digits alone, that's where I like to kind of focus on some new long-term positions. And right now we're just so far removed from some extreme readings. Another good time to do that was back in 2018, Q4. So we just haven't had a lot of these movements yet, moments to do that. You had some back in February of 2018, but few and far between since then. All right, let me get back down to where I was before there on the screen. Stop is 1785 for AAL, so just following up on that one. All right. Yeah, I mean, that's not a bad spot either, because you got a little bit of support right there as well, so that can work. Just be cognizant of Delta earnings coming out. Maybe that affects the AAL earning price action once they report as well. Glad to have Muna Vega here. Glad that you're offering up some questions here. Make sure you do it again in the future. FNF. Man, look at that chart, huh? I haven't visited this one in a while. It hasn't been popping up on my screeners either. But man, that was a nice pullback back in December to that rising trend line, and it's bounced ever since then. Has gone up with the rest of the financials. That's one thing too I haven't seen in a lot of my scans either lately, has been brokerage stocks like Schwab, SCHW. I had to even type in the name because it was like escaping me there for a second. But yeah, I mean, unbelievable moves in those names right now. But I wouldn't go chasing it at this point. I'm not about it, at least. I think the breakout, for me, I think that the last time to get in was around 53.23. Now it's just getting overextended, way overbought. 91. You can see here on the MACD, RSI, they're all overextended as well. I would look for pullbacks down to like 49.50 to get long on it again at this point. I think there's a lot of people piling into energy and financials right now, to a lesser extent materials. I don't think a lot of people have focused on the materials as much, but definitely with financials and energy. And if you start seeing tech rebound, I think there's a good chance you're going to see some of that money flow back out of financials, back out of energy, and go back into tech. UROY, Uranium Royalty. Wild stock here, just trading at 387 right now. But I'd be watching it over 446, 447. I think it has a nice base pattern that it's trying to form there off of the 200-day moving average, but it needs to get back above that level there. All right, Craig Francis got into net. I did not get into net. I should have got into net. Really should have. Kind of kicking myself on that one, honestly. But converging support levels there, held up really well yesterday, and even on Friday. So it's on a 3-day winning streak. You're not going to see a lot of tech stocks, especially ones in the software sector, that are doing that. But it's sitting right on this declining resistance level here. Hasn't broken through it yet. So keep your eye on that one going into tomorrow. Lyle Robinson thinks NEO might be breaking out this week. If I can just type it in. Again, I mean, for it to really make a good concerted move, needs to get back above 34. If it gets above 34, you got to start watching this resistance at 39. So those are your parameters that those are my parameters that I'm watching for on the trade. And I'll end with this one here, Adobe. You got the double top here. I mentioned this on StockTwits. I took a lot of heat for mentioning that Adobe was breaking through some major support. It's bounced nice over the last 2 days. That was a big move, bullish engulfing candle pattern there. For those who don't know what that is, that's just basically where the entire body of one candle engulfs the previous day's entire candle body. So it's almost like eating this candle pattern here. It's so big. You got the follow through today, not massive follow through. It didn't keep up with the overall market, but nonetheless, it strutted its stuff yesterday when the market was struggling and then finally rebounding. Watch on Adobe here, this 550 level. Can it get back above that? And if it does, you may have some resistance at around 572, but you have some room to run here. And that's the important part. To a lesser extent, maybe 538, but I would be more or less focused on 550, 551. All right, guys, make sure to just do me the favor. Hit that like, hit the subscribe button, and even get that little notification bell thing so that you can get notified when I do these live events on Tuesdays and Thursdays. I'm trying to do it between 4:30 and 5. I've tried to do it later at night, but I got brain fog at that time of night, so it's probably not the best time for me to be doing it then. But yeah, make sure to do that. Make sure to continue to support the channel. Check out the join button below. You're going to get all my market research each and every day that I provide. By clicking join below, you're also supporting this channel. Thank you guys, and God bless.